Yeah. You know what I mean?
What going on?
Hi, Nick.
Hey, how's it going?
Not too bad. How are you?
Good.
We are going.
My first pre-approval with Tiffany. Nice. Well, technically, she's handling Abigail.
Oh, is she?
Yeah,
Okay.
yeah, just when that thing got to be the most complicated one that we dealt with in
Yeah.
a year. That's probably not the best first round.
Hey, she's learning a lot on that one.
Yeah, yeah. With that. Entitled, hold the escrow.
I don't know that they can.
So initially, yes, that's how it'll look, is that title will hold it.
Okay.
But then because there's a re-inspection that is required, it will
Okay.
go back basically to the building there.
That's what I was wondering. I didn't know if maybe that would offset some of those fees or whatever. I let them know what was going on with it. I'm waiting for like a thumbs up, an okay, something. Cause yeah, sellers are
Maxed.
pretty much stuck at that.
That's fair.
18,000.
That's fair. I think that's fair. You know what I mean?
Yeah.
That makes
Yeah.
sense. And it's not like it's a ton of money, you know?
Right, yeah.
Recording in progress.
So I have it so that everybody like on Zoom can see you. I didn't know if you,
Do we
Yeah.
need the TV on behind
I
that?
don't think so.
Okay.
I like it. It's like,
So-
if we're boring, it looks like you're paying attention.
Are you requesting to record this?
No, I just,
Cause I
Joined it.
literally see Casey's AI note taker is requesting to record.
well, good
That's
thing
not cool.
good thing that I'm Chris and
That's
I don't know
right
what
there.
Casey.
Yeah.
AI note taker.
It says
See, we're
Casey's
learning.
AI
I'm
note
learning
taker, and
stuff.
they're in here twice.
Yeah, that is odd.
I don't know if I wanna approve it or decline it.
Do it. Unless you don't know Casey, then maybe.
I don't know them.
Then that's sketchy.
It sure is. Yeah, I only joined it because Adam brought up a question, like if they have questions, so that way I could see it where we can answer
Mike.
it. Assuming this is open. Or?
Yep, yep. The liquor's behind you.
I have to go grab my. Yeah, it's been a week.
Well, I was actually just texting you to say, I know you're on the phone, but don't forget about it.
Which one I'm in, just can you mark me down?
Yeah.
You're up.
I'll
put Nicole do it just because my computer's telling
Yeah, I mean, you're technically, I think, are a little taller.
Then Jess, yes.
Yeah.
Absolutely.
Mhm.
Kick us off here, Chris.
I'm telling them that we're gonna start in just a second, but to feel free to put their questions in here.
Look at that, he's on it.
We did open it up for embarrassing questions, but he directed it at Adam. In the team meeting,
Technically, yes.
we did.
I didn't volunteer for that though.
I like Adam.
Oh, I know. All right.
Just on the dock.
I make them.
She does special orders too.
Yes.
Yeah, she does. Yeah, there was her first question.
Baker. Is it just cookies or do you like?
I do cheesecakes. I don't like to do cakes
Yes.
I don't have the patience for decorating,
Yeah.
to be honest.
And she tried macaroons.
Yeah, I've done macaroons.
I've done those are temperamental, those are hard.
Yeah.
Yeah.
When I was trying to recruit Jess, I offered to invest in a bakery if she would not.
No.
Yeah.
I did,
Yeah, he was like, if you're not gonna join me, then at least open a bakery.
I did.
It's like, all right,
I have to
Chris.
get a cookie though.
All right. Well, we will get started. Hi, everyone. Thanks for joining us. And so this is literally just gonna be free, open, like you can ask us whatever questions that you want to ask, especially specific to Keller Home Loans, especially if you haven't worked with Keller Home Loans. And, or if you have a transaction right now and you're feeling like you're getting the runaround, even if it's not with, I can tell you that there's only one person in here that actually I know for sure has an active deal with us right now. And so, but if you have something going on, you're just like, hey, I don't feel like X lender is answering my questions correctly, like how would I go about this? That's what this is for. So we're here to be a resource, answer any questions, and get to know you guys. So, but I'm Christopher, Kayla, Adam, Jess. And so yes, does anyone have an initial question? Don't all go at once.
Why don't we start, I'm looking at I take mental attendance of my people on the Zoom, so I'm imagining what they would be asking as new people. So tell us what loan types you do and which ones you're gonna most often use. For a new person in the business, when they're thinking about working with a buyer, what are some of the names of loan types that they would be like, I don't even know what that is.
So there are a ton of loan products out there, but like
Most
if
used.
yes,
obviously, yeah.
most used are gonna be your traditional FHA, conventional USDA or VA products. So from a USDA perspective, I can just tell you upfront, they're very specific, to where like it's only offered in rural areas. But then in addition to that, you're going to see that they're very strict on credit scores, debt to income ratios, and total household income. And if you have any derogatory debt within the last 24 months, they want to know about that. But overall, if your credit profile has any derogatory debt, they want to know what happened in your life to cause it. Conventional is pretty standard. It's the, I don't know, meat and potatoes and what every listing agent wants to see. It's just not always ideal, because everyone's credit profile is different. So it is your stronger credit buyer or your stronger debt to income ratio person who is first time home buyer, second time, but if they have great credit, have really good debt to income ratios, they're putting a decent amount of money down, or as a first time home buyer, 3% down, that's what they're gonna go with. As long as their credit profile and total loan profile makes sense for them to take advantage of it. FHA is the friendliest of them all. It is, you can have a 503 credit score. It opens up homeownership for a lot of people and gives them the opportunity to say, hey, like, do I really want to buy a house? I understand that life happened, but what does this look like? So you'll see that. But they only require 3.5% down, and it's easy to make it happen for homeownership. VA can be tricky. VA and USDA are kind of similar when it comes to certain things. However, VA is only offered to veterans and surviving spouses. So if you have a vet or even active military person, like they can take advantage of it. It is a great product for them because it doesn't require a down payment. However, there are closing costs still, which is something that most VA buyers don't understand initially, is that they're just like, hey, I want to use my VA, but then it's like, well, you also have closing costs, and they're like, why? Well, no, like the big advantage is that you just don't have a down payment. So, and sometimes you can have the opportunity to take advantage of a VA loan, but if you qualify for conventional and you have the great credit profile, you have the cash down, sometimes it makes more sense to just go with a different product than it does VA. But it just really depends on the person, and some people are just like, hey, I serve this country and I want to use my VA benefit, use it. What other questions?
I think also to touch on that too, so for like a newer agent, I feel like a lot of the people you're gonna be working with are oftentimes like first time home
Yes.
buyers. So with first time home buyers, a lot of times they don't have a lot of money for their own down payment, so we have access to most of the down payment programs out there. OFA is one of the most popular down payment
Yes.
assistance programs out there. OFA is great. The only drawbacks to OFA is if they sell or refinance in the first 7 years, they do have to repay the assistance that they gave them, which can be, depending on the purchase price, a decent amount of money. And also the nice thing with OFA too is that not only do they offer down payment assistance, but they also offer a no assistance option. So I was working with a client this morning, and with her looking at going with an FHA loan with no assistance, that interest rate with them today is 6%, which is pretty significantly below market rates. So in a lot of circumstances, it can actually be beneficial in multiple different ways depending on the borrower. And then they also have their own requirements for OFA too. So one of the big things that you're gonna run into with like an OFA program or some of the other ones is income limits, which is really one of the main things that people can't qualify for that for, because they just make too much money. But we do have a program that works with people that do make too much money. Same concept, it's just this particular program is called Essex. It has a repayment with that second lien that they give them. So their payment's a little bit higher, so we don't typically are gonna start with that one. But if they're one of those people that actually do make too much money, it's a great fallback for people that don't have enough money to close.
Yeah, like, I mean, down payment assistance, some people like it, some people hate it. Ultimately, if you have someone who comes to the table and said, hey, I wanna buy a house, but I don't have X amount of dollars saved. And because life has happened or just have too much going on, but I really do wanna buy a house. If they qualify, they check all the other boxes, then you just have to get creative. So if down payment assistance is available to them, you down payment assistance, and then we're gonna go back to the agent and say, hey, yes, but like, they don't have any money saved. And so now you also need to ask for seller concessions. And so sometimes like they can have one conversation with you and they can tell you that their whole life is, you know, this perfect picture. And, but we get it and it's like, no, they only actually have $1,500, but like, we actually need to make sure that we hold on to that for earnest money and any inspections that you might do. So when you're asking for these concessions, if the listing agent asks why, it's because do they need to know that they only have $1,500? No, but they also need to know that in order for a deal to work, this is what it's actually gonna take. We're pairing the two together because they said that they're ready, they qualify. They just haven't either made enough money or haven't had enough time to save what it takes to actually move forward.
And I would say for the newer agents, as you're prospecting for business, how many more buyers would you have if credit and cash were not an issue? That's their biggest objection. So if we can help, you know, we have several tools to help with credit. We have several solutions for down payment assistance. Like, let's remove those two biggest obstacles and look how many more buyers you have, because cash and credit is not as huge of an issue as they thought it was. There's answers, there's solutions.
This
Can you
AI
remind
note
me to-
taker is so weird.
I removed that
Oh.
completely.
New construction, we do new construction, yeah. And we can do renovation loans as well.
Yeah, like the construction, it is a one-time close process. So if I'm being honest with you, if you have your solid conventional person, by all means, would we love to take the deal? Yes. But can they get offered a better opportunity somewhere else? I'm not gonna lie to you. The answer is yes. However, if you have a USDA or a VA or FHA buyer and they really do need, or they were just like, hey, I want to move forward on this. Send them to us. It makes sense. But like your traditional conventional person, they can go to other places and it is just a better deal. I'm not gonna lie to you about it.
And that's, a lot of that is because the builders will offer them a lot of discounts for
Yeah.
using their particular person. So then they can either use that to buy down their rate or do additional stuff in the house. So that's a lot of times where they just end up going with the person that they're recommended with their builder.
Yeah, like one of the big box builders in our area. The only way that we get a shot at that loan is if they can't approve that person. That's the only way that it happens.
Typically, it's for credit score,
Yeah,
'cause they don't go as low as we do. Credit
yes.
score,
And they're not as friendly on,
DTI.
yeah, debt to income ratios.
What is your lowest credit score? There you go.
The lowest or on an FHA is 500. However, they will have to have 10% down. They can't have any late payments on any unsecured debt or secured debt within the last 12 months for unsecured, 24 months for secured. And then they have to be able to verify either that they don't have a housing expense, or they have to be able to prove that their last 12 months of housing has been paid on time with a completed VOR. And if it's like a mom and pop, like he's an investor, so like if he is this person's landlord, he would be able to complete the form. But if it's like by a property management company, they're gonna have to be able to complete the form for us. And then in addition to that, they have to have 6 months of reserves. And so the reserves are basically where they show additional savings to be able to make future loan payments if something were to happen.
Yeah.
Do those people come across our computers and desk every single day?
Do those
Yes.
people exist?
They do,
They do.
and I look at it from this perspective, and in school, they don't teach you anything about credit. And so what most people do is they do whatever mom, dad, grandma, grandpa told them to do. So if that means that, hey, you pay cash for everything, or you can have as many credit cards as you want to have, or you can do all these things, or if they didn't tell them anything at all, if they were, fresh out of high school or something, and then like they just basically kind of went crazy because no one taught them, that's what you see. Or you see like people end up in bad credit situations after, like I've had clients after, battling cancer, they get, all this debt, or after a divorce or a spouse dies, and then they just don't really know. And then at some point they have to talk to someone to say, hey, like it's time to hit the reset button. Or like I had a lady last year and she battled cancer and she had to file bankruptcy, but then after that, then her grandparents passed away and she didn't know that she didn't know that they had all this money. And so like she had to meet with me, she had to meet with a financial advisor, like because her as an individual, she could not do it. So it's like, let's get you connected with the right people. But she was able to buy. And sometimes when you have like, that 500 credit score, they won't always get approved for a 30-year term. So you have to get creative with it. And typically the trick to offset the risk factor is basically doing it at a 20 or 25 year. Don't tell your other lenders.
But yeah, I think the lowest that I've seen us do was a 503.
Yeah, the lowest I've had is a 501.
I think we did one. Mine was like a 507. It was very low fives, and we did a 20% or a 20-year loan.
Mhm.
Because he made great money, his credit was just not good. But we were able to get it done with doing it a 20-year mortgage.
And like the other thing with those people is that, okay, so like they have that mortgage, if they're just like, this payment is a lot. And sometimes you're gonna look at it and you're just like, this is where your score is, this is how much money you make. It's pushing the debt to income ratio very much so on the borderline. Like, are you sure this is a good option? Well, at that point, if they are committing to saying yes to this, they've never been late on a housing payment, they've never been late on their on their car. They know that they need a vehicle to get them to and from work. That's number one. They're not gonna miss that. They also know that they need to keep a roof over their head. So some people live out of just knowing how to survive, and that's what they do. And so when they've had that loan for, we'll just call it 6 months to a year, they'll see a great boost in their credit score, and then they can come back and they can refinance and be in a normal 30-year term. Or even if it's at a year, like it can be at 29 years, whatever makes the most sense, to where like they feel like, hey, like I've done the work to get myself in a position where I can have a normal life.
Would you do an arm with them, like do a 3-year arm or something, 7-year to just have the little bit of a lower rate, if that?
Sometimes like it really doesn't always make sense. And my biggest fear for arms is when you have someone who hasn't managed credit well, you don't put them in a position like that, because if they don't really fully comprehend every single thing, and then when I call them in 6 months, or I call them 9 months, or even at a year and say, hey, like it's time to do this, and they're just like, oh no, I'm good. And then they put it off. I have a lady right now, and that's what she did. Her husband took care of everything. He passed away, and she was adamant that because he always did arms, always. But because she had never been the person to do it, she did not understand it. And so she had one with a big bank, and now she cannot afford to live in her house. But her biggest fear is that, do I just sell it and start over, or like, because she doesn't want to pay today's interest rates, even though that her ARM rate right now is 8.25. And she's just like, it's not that big of an advantage, but I just am like, I always tell her, I said, Miss Kathleen, I love you. However, you can't afford to live here. So what do you want to do? I talk to her once a week, and her daughter is a referral partner of mine. And so like, and it's just like we need to talk to your mom, because she's just adamant that she doesn't want to do this way. And she's like, well, then she's just gonna have to sell.
She just won't refinance because I'm.
Yeah, she won't,
Oh,
because
okay.
she's convinced that like her rate is gonna go back down. And she doesn't understand it. And
She thinks the arm is just gonna go down?
yeah. And she's like, but she also feels like if she wants to take advantage of a refi, she only wants to do it like if it's gonna lower her payment by, $300-400. And it's like, it's just gonna keep getting worse. That's all that it's gonna do. And so at some point, she will do it, because she'll be forced to do it. But like last month, she called me sobbing because she like couldn't buy her kids or anything for Christmas. It's like when people haven't had to do these things and they're just like, oh, life has been normal based upon X. But now life is not normal for you. And you just have to take the time to walk them through it, explain it. But like, because I talk to her so often, she's not gonna do it with anyone else. Like I know that. But I need for her to say like, all right, I can't do this anymore, and then I'm ready to do it. Because I don't ever want her to feel like she got forced into something, which is basically how she ended up in the situation she's in now.
Will you, because I know I'm gonna get all kinds of text messages from people that are like, what we were talking about with the arm, can you just explain like, what would the disadvantages be and how does that fluctuate? Like, if it's a 3-year, are they locked for the 3 years at blank percent and then after 3 years it goes up? Or what does that look like, that process?
One of you. They're tired of hearing from me.
Yeah,
Okay.
but yeah, that's basically, that's the contract, right? So it's gonna lock you in for the first term, whatever that is, so it'll set it at like a 5-year or whatever that ends up being. And then after that, it's gonna update the rate based off of the market rates at that time and continue to do so through the life of the loan afterwards. So arms are gonna be more commonly used by someone that's just temporarily buying the
Yes.
house. Like they know they're not keeping this loan for more than the term. But again, to Chris's point, if someone doesn't plan for life events and something happens, whether someone passes away, they lose their job, etc., now they're stuck and now they maybe didn't make the right choice. So that's where it's like, you really gotta be 100%
It's only
confident.
bad if rates had increased
Right,
from where
yes.
they were at. It's
Correct.
okay if it does.
Yeah,
Right, and so like if you have, let's just like, my mother-in-law, she works at Altman. And so like, she'll send me referrals for like their new residents, or, like if they have, like right now, they're big on like contracting travel nurses, but for 2 to 3 years. And which will allow for them to still be considered a travel nurse, but they get to go to their other, branches. Those people, they pay for their housing. So they have been putting them in I can't even think, either the Hercules building or I can't think of the other nicer, like, yeah, like putting them downtown is where they were putting them. But for the price of them, they could also just buy home, like help these people buy homes. And so as long as they qualify credit wise, ideally, most of these people don't stay here. They literally are here for their contract. And the only way that it backfires on them is that like, if they really feel like, if they really are truly a first time home buyer, it basically takes away that opportunity. So like if they were gonna be conventional, do 3% down, well, they're taking advantage of it now. However, what the cost of rent and all these other things that come along with it, but per Altman's agreement, especially for doctors and surgeons, it makes the most sense for them to be able to do. And you lock that in, you do an arm, but they're benefiting because the hospital is paying for their housing. And so they can easily do an arm, move on when their contract is up, and it's fine. And if Altman wants to, what I do know that they can do, Altman can buy the house from them, and they can basically just use it, and then Altman can rent out that house if they want to. I've only had it happen once. Any other
So
questions?
does anybody have any like recent situations that you've had happen where you were just confused by what the lender did or why it couldn't close or anything like that? Like, I'll give you an example. So I work with somebody in the group where they had somebody under contract and the house had a septic that did not pass based off of like the standard. So it technically failed the septic system test, but it was a perfectly functioning septic system. So the lender that their client was currently working through refused to move forward with the deal because it technically did not pass. But because the septic was still functioning, it was still a workable system, we were able to step in and help them get the deal closed because in that situation, their other lender just refused to do so for whatever reason. Everybody's got their own reasons for some things like that with their underwriting, but so like that's an example of like a situation where had that agent not taken the time to say, hey, wait, is there another way to try to make this work? And gave us opportunity to see if we could fix that for them, you know, maybe didn't happen.
Yeah. Anything else like that?
I am curious, how many people have used Keller home loans in this room? Alright, so the reason I ask that is because one of the things that I have found since we've switched over is like there are perks to using us with your clients over other mortgage lenders, right? So because we're all under the same umbrella essentially with Keller, so we are able to offer a little bit better terms for clients, right? So they're gonna get a little bit lower on their closing costs. They're also gonna get a little bit better pricing when it comes to rates, points, things like that. So I can just speak to, you know, where I came from, like when we came here, pricing did get quite a bit better. And
That
so,
was his first question. He didn't care about anything else.
I think that was a lot.
yeah, so at the end of the day, like it is important because when the borrower applies, like the first thing that they ask for is usually what's my interest rate? And so that's something that like you can't just give somebody an interest rate because that's not how that works. There's almost 30 factors that go into it. But when it comes to when they're shopping and they're trying to decide who they're gonna use, that is a very important factor. So that is one of the, I think, easy sells when it comes to referring us to your clients is like, hey, just so you know, they're part of Keller. They actually offer extra incentives for you guys moving forward with them in terms of interest rate, stuff like that. And I've also found that I think it can be an easier sell to refer to as well because we're under the same umbrella, they're a little bit more comfortable with that transition, like, oh, you're with Keller, well, I kind of want to work with Keller anyway, so that works out. So those are the couple things that I have seen that has kind of made it, in my opinion, a easier sell and an easier transition to that referral, so from what I've seen so far.
It's more of like a real
Warm.
warm transfer. And like, it's no different than if you have, you know, like, so on Nick's team, so like when he has a deal, you know, like, and he passes it off to, you know, like their transaction coordinator. And like, and if that person is communicating essentially on his behalf, then to some extent, like, he works with Adam. It should be the same. And so like, it's same team, everything should be mirroring the other, and they feel safer, they feel like it's just a little bit more of a, I don't know, welcoming touch to where it's just like, hey, like, okay, I had a great experience with Nick, having a great experience with, you know, his transaction coordinator. I know that I'm, you know, and I'm also now having a great experience with Adam. That's what it should look like. It in my opinion, it does help with the flow.
And a little peek behind the curtain too, to build off of both of you. So we are licensed and we have our license under our brokerage umbrella, just like you guys. So when I came 2 years ago, I had been wanting to leave my previous lender for a long time, but I could not find anybody to compete with the rates. And that was most important to me. Like I stayed in a place where I didn't want to be for longer because I needed to stay competitive for my clients and my partners. So coming here was the same, like I needed to be guaranteed. They actually gave me a glimpse into the pricing before I came, so that was really nice. But we are a subsidiary of Mutual of Omaha, who has been around for 115 years. And we have lots of dual agents who are both Mutual and Keller Home Loans. So even comparing those two pricing, I know you guys probably get to see it, but I'm told that Keller Home Loans even has a little bit sweeter pricing than under mutuals, because when Gary sold 51% to mutual, this was the agreement that we were gonna have our same margins, that we weren't gonna take on mutual. So when we say that there is a clear benefit, like I was Keller Mortgage for a couple months before we went into Keller Home Loans, and I was part of that transition. They stayed true to their word, and Gary makes sure of it. So that's why, like, I've had a couple agents like, well, doesn't it look kind of sketchy because you have a Keller agent referring a Keller loan officer, and nobody questions it for Howard Hanna. No one even bats an eyelash at Howard Hanna, so that's my 2 cents, but I'm glad you guys can back that up with the.
Yeah, I mean, like, I had, I work with Keller agents and I have for years, but one of their concerns initially was like, hey, like, don't you feel like it's gonna be like this one-stop shop kind of approach? Yes and no, but what I can also tell you is that I haven't had a client complain or like question and say like, is this like legal? Like, are you allowed to do this? Like, isn't this kind of weird? Like, no, it's literally the same way that we've been referring to each other for years. But now when, we go back to them and we say like, hey, like, you get offered lower, closing costs, or you have an advantage to take it, for lower rates and this, that, and the other, like, it's just, they don't care and they're okay with it and we all move on.
Mhm.
So it's not as big of a deal as what some people make the assumption for it to be.
The other thing that I found really cool, I didn't see a few of you guys in that training that we did, but what is your guys' CRM called again? I forget. Command. So with the command, with the referrals that you guys send us, you'll actually be able to go in there and you can print their pre-approval, you can dial in, like if you need to say a certain purchase price. I just learned that I didn't know that was a thing, so like that's really cool in itself, like on a
You can
weekend.
lower it, you can't bring it up.
Yeah.
You can bring it down, you can't take it up.
Yeah.
So like you can, for an example, most people, like I pre-approve clients 2 ways. I pre-approve them either based upon their max pre-approval or where they tell me that they are comfortable at for a monthly payment. And so what I never want them to see is like, because they always kind of feel like, like on the finance side, like, we're like dirty used car salesmen or something. It's just like, oh, they wanted to just, I came in here for a, Ford Explorer and now he's trying to sell me, this Lincoln Navigator. No, not the same. But I also don't want a client to be in a position to where if we set it at 300 and a home at, 315 comes on the market and then they question, they're just like, hey, well, and they're having a conversation with you and they're just like, you know what, Caitlin, well, actually, like Chris said that I only can go to 300 and this home is at 315. Like, do you think that they'll, take, 299 or 300 and like it's the first day on the market and then they don't know if they don't know really what their true max is. Or sometimes you have to go backwards and if we're just like, hey, your max is 300, they see the 315 house because they were just scrolling on whatever, then we have another conversation to get more creative. But I also think that it's very important to ask them if they've had the conversation with themselves, their partner, whoever, what is your ideal monthly payment? What have you said that you can actually really budget for? Because if we don't talk about that in the beginning, and I give you this pre-approval, like my wife, I always use her as this example. When we were looking at homes, she was just like, because initially we had a condo that we owned, but it was a nice condo, but our monthly payment was also very low. And she was like, I don't want that number on there. Like, I'm not paying for that. I'm not doing this, I'm not doing that. And it's like, well, we can afford it. And she's like, yeah, but are you sure? And I'm like, yes, I'm sure. And so we had to change like our pre-approval because every house that she thought that she wanted to live in, she didn't like it. And she hated it. And I heard all about it. However, then when we found our house, it was the only house that we could agree upon. But then I had to go back to my boss at the time and say, hey, can you increase my pre-approval letter? Because it's the only house that Hay and I can agree upon. And she says that, all of a sudden she believes that we can buy this house. And so like, if you can get to know your clients that way and just know that sometimes like payment is big for them. And like my wife is very strict on the fact that we need to have X amount of dollars in this account and this account, and she's not budging on it. But when you know those things about your client, you'll know, like, should I show them this house because they had this conversation, or should we steer clear? And our agent just randomly took a risk to show us this house, and it worked.
And I think there's a fine line. I think some agents will want nothing to do with the finance side. They just wanna like stay in their lane. But I think there's also a fine line because like somebody that got pre-approved 3 months ago has been on a roller coaster of interest rates.
Yes.
Like, so your pre-approval, your monthly payment and your purchase price, those are constantly changing based on the market. And so if somebody's been on the search for that long, it's very important for the agent, cause I mean, I could have a pre-approval that's expired, it's been out there for 6 months and it's expired and a contract comes over out of the blue. And nobody even like shopped, what's my payment gonna be? I try to prepare them when it's pre-approved for like, this is your max, this is your payment, this is your down payment. Like, this is what you told me you want for your monthly payment, so let's look in this price range. But again, that's gonna be ever changing, especially in this rate market.
Yeah.
So you might wanna, obviously keep your client's confidentiality, privacy, financials separate, but also nurture that whole relationship and still pay some attention to, hey, have you talked to Kayla lately? Maybe let her run this payment for you.
I find that this keeps coming up now too, and I work with a lot of buyers, thank God, but. Seriously, if I have to show a house, I do a little tantrum in the driveway because I really don't wanna do it. True story. Anyway, that people who've gotten pre-approved and they have their figure in mind and they have their payment in mind, didn't necessarily take into account the big tax increase we just had, which depending on where their location is, maybe it says they're pre-approved for $350, but that was based on a payment of blank when taxes in that price range were blank, and now they've sometimes doubled. So if they're pre-approved 30 days, when should we be telling people to go get updated?
You don't even necessarily have to get it updated, however, I tell every single client, I don't care if they make $30,000 a year, if they make $1 million a year. Regardless of the home, before, if you are sitting there and you know that like the only person who can tell that a house feels like home is the client. But if you think you wanna move forward, send me the property address. Let's run the numbers based upon what you are thinking that you want to do. Have you had a conversation with your agent about like where you wanna come in at on an offer? Because that's how I'm gonna run your numbers for you initially. And if it's lower than what the current asking price is, I'm also going to run it at the asking price in case you get a counter. So then at that point, 2 to maybe 3 sets of numbers before you sign anything. And it's not to talk them out of a house, it's to where like they can see it and you know that they're not immediately having buyer's remorse or payment shock. And then they want to back out of a deal when they said yes. And they said, this is what I want. And the kitchen is perfect and this, that, and the other. You were there with them. You got to see the physical of how they were feeling and we only get to hear it. And so if that's what it's going to be like, they need to have that conversation. And so every single referral partner of mine is always like, hey, have you had a conversation with Christopher? Have you ran your number scenario? So on and so forth. And if not, they text me or call me and say, hey, have you heard from X person? Because they said that they really want to submit an offer. And I'll say, hey, yes, I've heard from them. They have all the details. Or I'll say, no, I haven't heard from them. Do you want me to reach out? And they'll say, well, sometimes they say like, let me circle back with them. Maybe they're not interested anymore. Or they'll say, yeah, go ahead, because I know that they said that this was the one. But they don't have to automatically like, do these check-ins, but like we will check in to refresh their pre-approvals. But if they're interested, my rule of thumb is like, you gotta come to me because I'm not out looking at homes with you. I only know after the fact. But then and some people, they'll send me homes before they even go see it.
That's what I have people do. If you wanna go see it, send it to me. That way, when you step in the house, if you're thinking like repairs or whatever like that, you still have all your numbers in mind and you know what you can budget for. So I'm like, if you're interested, just let me know, we'll run the payment, and if they're in different cities too, like, or townships, the taxes are drastically different, so it's gonna change your monthly payment. So I would just say, send it to me, if you have a list, that's fine, and then you know what you're getting into before you can step foot into the home.
And I can say like the cycle of, or the psyche of a buyer. Typically, they're gonna be on Zillow looking at that property because Zillow threw it up on their Facebook, and they're gonna look at the Zillow payment, and that's gonna cause them to say, hey, schedule a showing. Zillow's payments suck. I don't know anybody who can get insurance for $30 a month. We have an excellent mortgage calculator through our app, so when they set up their app with us, they have access to run all their own calculations. But refer to us first, because I'm sure all of us do this. The county auditor has a tax card for each property, and there's a tax estimator, which knows which levies are passed and which levies are gonna be inflicted on that particular property in the coming year. So they can do the tax estimator, and we could use that average and really get a good, like, meat and potatoes payment estimated for them. So that eliminates a lot of surprises. The huge surprise is that they're under contract and they're like, well, Zillow said my payment was gonna be this. It's not a good scenario.
It also like, and this is no offense to listing agents, because I know that there are some of you in this room. But sometimes, like if a home has a homestead credit, that doesn't transfer. So, and if that's not removed, and then like I have a client right now and her agent told her one thing because it was also listed on everything for the listing, and she's like, well, these property taxes are $120 higher than what is on all the other paperwork. And then her husband was like, however, it's not different than what numbers he gave us before we submitted our offer. Correct, they're not. But I said, if you recall, I said to you that the homestead credit doesn't transfer to you. You'll get to take advantage of it technically for this upcoming payment that's due, but what's going to get escrowed is not based upon that. This is what we're using, and if something changes, title will confirm with the auditor's office and will adjust before closing. However, this is how I'm going to present it because this is accurate based upon my 12 years of doing this. Like, so you can either go this way or you can go a different way. But she's just like, well, how do we get it? You don't qualify due to age, you don't qualify because of income, and you're not disabled.
And on the listing, like on the MLS, it's a required field to say homestead, yes, no. So, yeah.
Sometimes I think that some agents, like I have agents who'll call me before they list a home and they'll say, can you look at these taxes because like, I don't understand this county's website, or I don't understand this, whatever. No problem, I'll do it. Because if you want to put it out there, I want you to put out accurate information, especially if you have a buyer that you referred to me, because I'm going to give them the same number I'm giving you. So like, let's just make sure that it is correct. But for new agents, like if you want to learn about products, you want to learn about how to get into the auditor site, calculate these things, you want to learn anything that you want to learn about how we do things on this side, so that way you can have better consultations, call me, email me, whatever, call any of us. Like there are some agents who I've spent somewhere between 30 minutes to an hour with per week for their first 6 months. And to make sure that when they get out there and are out there, that they're really prepared. Because if you are prepared and you're winning, the business is obviously going to come back to me based upon our relationship, as long as whoever you're referring, like dad, grandma, grandpa, whoever, it doesn't work at, whatever financial institution, I'm going to take them. So like, but also like, I like for people to be set up for success. So if we can set you up for success, and if I can be a part of that, my team can be a part of that, like you're going to know that, you're going to remember it, and that's how relationships form.
Do you do a floating interest rate, like with the rates changing so often, or, once it's locked and you're done from there? Like if the rate drops while you're under contract?
So I'm the biggest risk taker up here, so I can. Adam likes to say that I've, lived this life of being like willy-nilly, and I can tell you that if I'm watching the market, sometimes have I had to eat crow? Yes. And I'm okay with that, like, I just am, but I will either float a rate, especially like if it's on a contingency. I'm floating it, unless you tell me that, hey, like. If push comes to shove, we have this backup plan and it's gonna go, like, I'm just gonna float it. Like, no doubt about
So
it,
you're waiting
Until
until, is that what
Yeah.
you mean? You're
Yep.
waiting, you're pushing it to closer to closing.
but
and
we
taking it.
disclose it, and so regardless, because it was disclosed that way, that's worst case scenario.
So we have to make
So,
it
like,
match that no matter what.
Yeah, so like,
It goes up.
if it goes up, it goes up, and that's where I've had to eat crow.
Yeah.
And that loan estimate is checked, locked or unlocked, so you know if it's floating or not. But here, and I don't know what the, like, so here, if we do lock it in early on and before, like, if they're within 14 days of closing and they have a clear to close. We have a formula, we can go back out to the market, and if we have a 50 basis points improvement on our, like, our behind the curtain pricing, like, we know it's gonna make 50 basis points or more. We will give them a one-time free float down, so it can't go up on them, but it can go down on them at no cost.
Yes,
But it has to be within 14 days of closing and it has to be clear to close.
and it has to be that way, especially for funding purposes. Because it has to be like in the 50 basis points is key, because they've already bought in with that investor for that previous rate option. So if they're gonna improve it, both sides have to be able to win, because initially someone's gonna take a loss. But it's easy to be done, you can do it from 15 days to 60 days. And if it needs to be any longer than that, that's a different conversation, and it just would say like, why do we need to push it out that far? Because ultimately, unless rates are like, something happens and it's like, we're at rock bottom and this is the best thing that we're gonna see. Then sure, but if it's not the case, like, anything can happen, like, even for like over the last 3 months, like, it's just been this never ending roller coaster, so you just have to kind of play the game.
So most of the time, you're gonna disclose it and lock it like
Yes.
sooner rather than later.
Yeah,
Okay,
if it's a simple
I mean,
30
that's
day,
what I'm doing now, but I was just curious.
yeah.
I like to
Yeah.
avoid the grays. I don't know, but.
Yeah.
My kids are 3 and 7, and so like, I find a new gray hair every single day. And so I'm okay with it, and I don't know, but regardless, I live my life as a risk taker.
So question for you guys, just individually, when it comes to your referral partners, lender, whatever it is you're referring, what is the most important thing? If you had to pick one thing, what's the most important thing to you when you're referring somebody?
Communication.
That's the number one thing that I always hear. So that's one thing that I did just wanna touch on with you guys is. I can tell you, we are all in a group chat that is going from morning to literally 10, sometimes midnight at night. And so, like, if you guys have clients that you do need an evening, weekend pre-approval. Someone here is gonna be able to help you guys with that. And so communication ultimately is the most important thing when it comes to client experience and also getting the job done, right? So. Just so you guys know, if you ever have that situation where someone is not getting back with you and you guys need something in a pinch. Please reach out to us, because someone's gonna help you guys get it done, and we'll find a way,
Because
so.
it's always a Friday night, 8 o'clock.
It's always Friday,
Like,
yeah.
it is.
Especially if you're on vacation, they're coming in,
Oh,
Yeah.
vacation, yeah.
yeah.
Adam, and it never fails, and I can just say that it's always with Nick's team. Adam will say that he's like, oh, everyone knows I'm going on vacation, everything is good, and I'm always in the grocery store, and I get a text or a phone call from Chris. Hey, you got a minute? And I'm like, can I check out first? And he's like, okay, sure, call me back. And then, and it's like just one after another, and Adam's like, why am I always the busiest when I leave? And I'm like, I don't know, you tell me. But it never fails, and it's always good, but like, that's the helpful piece behind having a team. So, like, I can tell you guys that we went on vacation over Christmas, and it was the first real vacation that, honest to God, in my adult life that I've ever gone on, ever. And I was like, is this what this is like supposed to be like? Because this is odd. And like, my in-laws were there with us and they were just like, you don't, like, you're not working? No, I don't need to. Like, I can actually enjoy a vacation, like Christmas morning, like we went to the beach. And could actually be at the beach, and the only thing I used my phone for was take pictures, and I was very surprised, guys, like. So I don't know how much I can get used to it, but
I
it was
mean, I think
nice.
we yelled at you a few times to put your phone away.
Yes,
We
they
got it,
did.
put your phone away.
They did, so, yeah, no, if you need anything. I personally answer my phone from 7 AM to 10 PM. I wake up every day between 4:45 and 5, and from there to 7 is like my time. And at 10:01, my wife will literally look at me and say like, is your phone on do not disturb? So, like, outside of that, from 7 AM, 10 PM, unless you give me a heads up, like I had a buyer last night text me literally until 10 o'clock. And she was like, okay, I'll finish talking to you in the morning. And at 7:03, she texted me and said, hey, I uploaded the rest of my things, and I was just like, I got them, I got the emails just like you did, but thanks. And so that's how I do things, and I do that 7 days a week, so. And if you can't reach me and you need to reach one of them, by all means, like, do so. We're here to help you help your clients and literally just win together. Any other questions?
Going once, going twice.
No embarrassing questions, none for Adam.
So you all said like communication is the number one thing. I can tell you that that's what every agent always says. But then if you're using X lender and like they're your favorite person, you have this great, friendship and everything like that. But then like you can just say like, hey, I haven't heard from them in a while on this deal. So like sometimes communication is not the most important. So really, like, if you had to say something, like, what would be your next most important thing that you look for in a referral partner?
I think when I say communication, we could all mean, it's such a broad term.
Yeah.
So it can mean something different. Here's what it means for me.
That's-
I have this idiot buyer I can't stand, and they won't listen to me about getting pre-approved ahead of time, and damn it, we found a house. And now I need you to answer your phone because we need to get them pre-approved within an hour. Because there are multiple offers on the house and they refuse to listen to me for the past 6 months about it, true stuff.
Yeah,
And we just need to know that you'll answer and do the best that you can, obviously. No one thinks, it's like telling the title company, we need you closed tomorrow. We're not trying to be unrealistic, but just that you'll answer the phone, not necessarily, I don't mean communication like you'll keep me updated. I'm already aware you're gonna keep us updated. It's more, will you answer the phone when we have this customer who's like, I gotta get pre-approved right now, okay?
So to answer your question there, so one of the things that I really like about Keller is that every single individual agent that we have as a referral partner has their own specific application link. So in that situation, let's say you and Chris work together frequently, you would have a mutual application that you could directly send to your people that need to make the offer right there. And they can do the application, they need to get the documents in there, but at that point in time, say Chris is having a birthday party for his kid or whatever, he could literally put it in any of our names, we can hop in and again, that kind of goes back to the team effort thing, but that would solve your problem.
Like, I had a lender recently tell me, we're putting in, hey, I'm putting an offer in on a house, oh, we want to, and it's New Year's Day, you know what I mean? And they're like, well, what do you think the chances are? And like, we're gonna go in under asking, and they said, what do you think the chances are that they'll get it? I was like, probably low. But if they get pre-approved, then they'll keep shopping with
Yeah.
me and like continue that relationship. Like, I know they probably won't get it, but like, they're like, I'm off today. And I got that answer a couple times, like, I'm off today. And it's like, communication otherwise is great, but that's just like, I like the team aspect of, okay, I understand you have life, like, I'm not asking you to do something when you're at a funeral or a wedding, but it's like, okay, what, now that buyer is like on the back burner now, and I'm not shopping with them right
Well, we
now.
don't choose that, right? Like, I wouldn't choose to show a house on New Year's Day.
True,
I'll choose someone who's not listened to me for 6 months about getting pre-approved,
true.
but it comes
But
up,
you are,
and we have to do it
Yeah.
sometimes.
yeah.
Yeah.
To your point, Caitlin, is the really thing that's hard for me to like agree with the other people is that, yes, it may be a holiday, but literally everything we do is on a laptop. Like
Mhm.
an application, you can literally have it pulled up. Now, the systems that we use is called Encompass. It sucks and it does take forever to do anything. But like an easy application where the borrower has good credit, let's say they're salaried and they have a bank statement that shows they have the funds,
Mhm.
you can have that pre-approval in like 15 minutes.
Mm-hmm.
So in that circumstance, I don't necessarily agree with it, and it's one of those things where, again, even if it was a situation or it was a holiday where someone was busy, someone's gonna be able to step up and help you get that done.
You know what I heard though too from other loan officers? They said this to me. I feel like there's agents that send me their leads in those times. Only because they know I'll answer the phone when really they're gonna go and have their customer get pre-approved on Monday with somebody else.
Mhm.
Like, I've actually had a lender say it to me before,
And you
and that's
do,
why they might
This is like
say.
my trusted lender though.
And, but,
Yeah.
And I'm like,
gotcha.
and so
Come on,
like,
man.
you do, you see it from both sides. And so like, like, my mom has done this since I was 5 years old. So I've seen the good, the bad, and the ugly. And sometimes you get the person who does feel burnout or they feel used. However, if that's the case, you have a transactional relationship and it's not real. So if like that conversation, sure, was it a real conversation? And like, okay, do they feel comfortable enough with you to be able to say what they said? Sure, by all means. I've had several conversations where it's just like, okay, like they obviously don't understand the market. If this is where they want to come in at, however, it's not my money to spend, it's not my house. So if this is what they want to do, then sure, like I'll spend the 15-20 minutes to put it together. And you're gonna spend however long putting their offer together. Like at the end of the day, it's what we all signed up for.
Mhm.
And so like you don't just get to be in one day and not the next day. It's what you signed up for. If you don't close a deal, you don't eat. So figure it out, because at this point, truthfully, you could start basically shopping and dating other lenders. And that's their loss. And if you look at your track record with them and how many deals you have closed with them, when they come back to you, you could just say like, hey, on these several occasions, you haven't been able to provide me with the same expectations and standards that we established from the beginning of our relationship. And if that's the case, I had to go and basically look for things elsewhere. That's just how any relationship works.
Not that you're trying to be unreasonable, sometimes we have to say, don't we have to sometimes tell our clients, I'm sorry, no, I'm not showing you a house today.
Yeah.
Like, there's times when we have to, so I think it's the same there. One other question and concern I have that comes up a lot is this. So you guys are all, am I understanding, loan originators, and then you have a processing team, or are you doing your own processing?
So we have our own processor,
Okay.
and her name is Ashley. And Ashley actually graduated with Adam, and she is Jess's best friend.
Okay.
So, yeah, so like but Ashley is also licensed, so she knows loans. And if she, like, one thing for me that was hard with Ashley is I have never allowed anyone else to talk to my borrowers. But because she knows loans and she knows exactly what she's asking for, I haven't had an issue with it. But it was like, it was hard. I'm a control freak, if you can't tell. So like, it was just like, hey, are you sure? I met with him and he was like, oh, I love it. And I'm like, I don't really know. But she essentially is there to again mirror what the foundation is already.
It's about trust, you found
Yeah.
somebody you trusted that you can hand that off to, and then you feel
Yeah.
comfortable doing it. How does, I find in some cases, perhaps their loan officer never explained to them that there was a processor who is now going to step in and their name is. And then when you start getting emails from that person, it's like it's me, but it's them. And then I do hear this a lot from people, and I've experienced it also myself. From clients, not agents. I already sent them that. And now I'm sending it again, and now I'm sending it again. Why do I have to send my W-2s for 2022 to them 5 times. Because 3 different people keep touching it, you know what I mean, like, so I'm assuming, I'm imagining in my mind, there's a central database.
Yes.
You upload it and everybody has access to it, like, right?
So this actually happened today.
Hmm.
Nick Remark had emailed me 3 different items. It was on the 10th. I put them into the file. However, they did not save. So Ashley sent an email and said, hey, like, I'm still waiting on these things. And then I text Nick and I said, hey, did you see Ashley's email? And he said, yeah, but hey, did you see my email that you responded to? And I said, you are correct. And he was like, all right, my dude, have a good day. And I was like, you too. And then I literally went back to my email, sent her the email, and she was like, so she responded to the agents and said, hey, never mind, I got what I need, and we moved on. And some, like, Encompass does suck sometimes, it just does.
And I don't mean you guys, I mean,
Yeah.
it happens all the time.
But like, you will also see it to where, like, the lady I was talking about last night, not only did she email me documents, she uploaded documents into her application portal, but she also texted me pay stubs, her driver's license. And so, like, if I don't take those from my phone to upload them, you could have a situation like that. However, like, I made myself a note, I already put them in the file and called it a day. But like, Ashley will touch base with us, like, every single Tuesday. Adam has a processing meeting. And I talk to Ashley at least 15 to 20 times a day. So she will touch base and say, hey, like, do you have X, Y, and Z before I go back? Or do you want me to ask for this? Or do you just want to handle it? Because we don't want situations like that. And if we don't have communication, unfortunately, sorry, like, we just look like a shit show. And that's what it looks like.
And there are some models that have like a processing team, so your file could go to any processor,
Processor.
or they'll have a junior processor, or they have somebody that orders title and appraisal, but they're not the processor. So now everybody's reaching out and we have one processor. She gets all the files, so she is very in tune with how, like, the life of our file and the history of our file. And like he said, like, she's available for 1-to-1 meetings every week, so that streamlines it. But too, like, to the point of like the weekend and evening things, like, for me, like, if I can get a 15-minute pre-approval on a Saturday instead of having a pre-approval out there for 6 months, I'd rather have a 15-minute pre-approval today. So if they're not, like, and it also depends on how they're compensated, because, you know, if we don't close, we don't eat. Some people at banks, they probably get a base salary, so they don't make as many commission points, they're not gonna be chasing that as hard for you.
Things are never answering the phone after 5.
No.
But they don't answer the phone too.
But to that point, if you're sharing out that co-branded app, so it has your picture, it has Adam's picture, you're sharing that app out. As soon as your client downloads the app, you're gonna get notified that they downloaded it. As soon as they submit the app to us, you're gonna get live time, real time update. They've submitted the application. As soon as we pull it into Encompass, you're gonna know we're working on the file. So we don't have to send those updates out. You're gonna be putting your contract, your offer together, and you're gonna be getting live updates on how the financing is coming in those situations.
The only other complaint I can say about that I've experienced with lenders over the many years is this. Some lenders have said to me, we're going to wait to order the appraisal until after you tell me the inspections are good to go. And let me tell you my answer, whether I'm a buyer's agent or a listing agent, you're causing my client to breach the contract. Because our purchase agreement states they need to do all the stuff, which includes ordering the appraisal. So when do you guys do that?
We won't make the assumption to make that call.
Mhm.
However, if you ask me and say, hey, like, Jess has had a few of these
Yes.
within like the last like month or so, where they don't want it ordered until they know that the appraisal, like the home inspection is good to go. Because ultimately, unfortunately, we have to charge them.
Right.
We make them pay for it. I operate from a rule of thumb is, like, if you go under contract, we order the appraisal, you paid for it, it comes back, and then you walk out, like, basically back out of that contract. I'll give you a credit on the next file.
Oh, really?
Yeah, we just did that on one of mine.
Do I love it? No, but I will, because we want to be able to keep them. And I don't want to have this issue of, hey, like, they're just out for my money.
I guess I'm thinking more of the, again, coming from a listing agent perspective, it's just called skin in the game.
Yeah,
So you bought a house or made an offer on a house, and when you decided that you couldn't come to terms on a leaky faucet and now you wanted to back out, you don't get your home inspection money back.
correct. And so then like, but you run into the issue, it's like, hey, like, well, I paid the 500 X amount of dollars for the appraisal, I paid the, 400 or whatever for the inspection, and now I'm out of this money. And so from just human to human, it's like, hey, okay, on the next one, I'll give you the credit. However, you can't basically be a, repeater and just basically
And
come
it's
back and
probably
keep
more
doing
sticky
this.
when someone is really thin their budget.
Mhm.
Someone who sold their house and they've got 200,000 equity, we don't have a problem.
No, you do.
No,
No, because at that point, like, it's your people who are truly in the middle that are the most reasonable. But when you have your people who are on like barely able to do this, or your people who have all the money in the world, and to them on how they feel like, or they're just really well off, they are penny pinchers
Looking at the pennies,
just
yeah.
as much as the person who's barely able to do it, because to them, it's like, you're doing this loan for me, and then they have this, false reality that we're making all this money off of them, and we should automatically have to do this.
Got it.
And so it's same way like when they say like, hey, I'm gonna shop lenders for rates. They don't care that you interrupted my kid's soccer game and I stepped aside to do all these things or whatever, and then you go under contract and it's like, well, I talked to Huntington and Huntington is offering me X, so if you can't do X, like, see you later. And that's just how it works. So you have to be able to, it's a give and take. And so like, I just operate from that rule of especially when it comes to an appraisal, I'd rather take a slight loss to keep you than fight with you to lose you.
I guess I wouldn't care so much about the appraisal thing if it didn't delay closing later.
If it's gonna delay something, like that should have already been communicated.
Right.
And you have, like, most people have to do their inspections within like the first 7 to 10 days.
Yeah.
And so an appraisal should only basically take somewhere between also 5 to 7 days. So, but if they've done all the other legwork on getting documents submitted, and like Ashley has reviewed it and things are moving in motion like the right way, we're good. Like, they're just like, you shouldn't have an issue. If they aren't submitting anything and Ashley's like, hey, like this file is just kind of sitting stagnant, then that's where you run into an issue. But then you should hear from one of us to say, hey, like, they haven't done X, Y, and Z, and you don't want me to order the appraisal, so like, what do you want me to do with this? I can have a come to Jesus moment with them. However, like, it's going to potentially cause a delay because we're missing these pieces and parts. But that communication is necessary, because without it, you're just gonna question our ability, the buyer's ability, and then you're just like, hey, like, well, who do I trust?
And it's not gonna sit in processing until that appraisal's back. Like, as soon as the appraisal's ordered, if we have everything else, it's gonna go straight in front of an underwriter. So that we have a first look and know we can keep collecting any other conditions that we need while we wait for that report and the title work to come back. So it's not gonna stop the process. Everything's gonna be working in the background, but it's, yeah, that shouldn't kill the deal.
Well, thank you, guys.
Cool.
Well,
Thanks for showing up. Appreciate having a little crowd here. Sorry to nobody.